Good morning, everybody. This is Patrick MontesDeOca with the early morning update in precious metals for January the 6th, 2021. Sorry about the delay here. I had some technical issues this morning, but we are back live here. Let's just take a look at the market currently. We had some activity earlier this morning in the gold market here. The market came down from the average price of 1950, activated a bearish trend momentum at about 4:15 a.m. Actually, the market overnight rallied about 11 p.m. above the average price of 1950, which was the daily average price as we came in today, and activated the sell one level daily of 1961. And we had in place the 1962 target since the beginning of the week. The market rallied, completed the target, and activated a short trigger. A reversion occurred, and at 2:15 a.m., no wonder why I was restless, the market reverted from that signal and activated the target initially of 1950, and of course the targets below of 1942 to 1931. It came down, met the initial target of 1950 by 3:45 a.m. and activated a bearish trend momentum with the targets of 1942 to 1931 activated. Now, you can see the market came down, completed this target of 1931 and came below with a low of 1931.80 and reverted right back up above that 1931. This created a buy trigger with a target of 1942 completed. Basically, this is the trade that we took early this morning and recommended all of our traders, subscribers, pretty much in my private trading room to do the same. We are just for the benefit of the subscribers in my private trading room here. We've had some issues this morning with TikToker. They're moving into a new website, and so please bear with me or with TikToker until they resolve those issues this morning. But in the meantime, you can get the live show as I'm doing it here in the Discord trading room as well. So we've come down back into that 1931 level, which is the buy one level, and now we are actively looking for a buy trigger from 1931 on a close above 1931. We've had a couple of triggers here and activated a buy trigger from that level. So let's watch the market here from this level here and see what the momentum is. But we are long from these levels here of 1931. We're testing this level of support in gold and silver. So we want to let the market breathe a little bit here at this level and see what it wants to do. We have just updated all of the derivatives instruments for the trading session here as the US market opened up. And now we have pretty much the total picture. 31, 31, 32 is showing a good level of support. And we want to see the market pretty much revert from these levels here. This is a swing correction back down into the buy one levels here that indicate support. And as you can see, right below the daily of 1931, we're looking at the weekly sell one level of 1925 that serves as support. Once the resistance is broken, as you know, it becomes support for the next fractal in price. The silver market is activating a buy signal here from 27.28 on the close of this bar. So we seem to be getting some good interest now in the silver. According to the VCPMI, these are high probability levels where you are going to identify buyers in the market. A close above 1931 at 7:30 would activate a buy trigger. If it closes below, do nothing. You're at a high probability level where a reversion may unfold on the daily, but if it doesn't, the 1925 is the next target, and we'll see how the price trades the demand or the supply in this area here. That's why I'm watching this very patiently and see what the momentum of the market resolves into. We're testing that 31 level here. No signal. No signal. The signal earlier from 1962-61 actually was also joined by the monthly average, or the sell one level that we saw, which was the 1950. That was the sell one monthly level, and we got up to 62.50 this morning and reverted right below there. So we joined the monthly, the daily, and the weekly pretty much on the reversion back down into this levels of where we are pretty much of support as we take a look at the daily numbers. 1925 was activated, and that is the sell one weekly level. And now we want to see if basically the market has continued selling pressure enough that it's going to activate the weekly short trigger at 1925. If you just joined us here, we have basically a three-stop process that we follow depending upon your profile. If you enter into a trade, the most conservative stop is a close below the pivot level right after you enter the trade. The second stop is a dollar amount that is comfortable for you in your profile. And the third basically is to wait till the close. When you're trading or you're buying from the buy to level, you're looking at a 95% probability that the reversion looks to unfold as the market trades throughout the day. So depending upon your profile for risk, your appetite for risk, then you can use any of the three choices of stops. The only time that we recommend a straight stop is basically when you enter a position and the market begins to move in your direction right away. But outside of that, we do not use a straight stop. We use the close of the 15-minute bar. I'm telling you, and I'm showing you and sharing with you the specific functions of the algorithm that was written in C++ in easy language. This is actually reversing the intelligence of the algorithm for the benefit of self-directed traders. We're holding on to this 1925 level here. $25.10, $25.80 bid, $25.90 offered. So we're getting some buy-in interest in the market here. A little bit of a sell-off. And pretty much completed the target of 1925. It's turning out to be a quiet day again, as I believe we still have a low volume here for this week. So we just want to follow the market here and follow the momentum of the market. 25.90 offered, 26 bid traded, 26.20. We're getting buyers coming back in here at this level. Closing above 1925 at the close of this bar is going to activate a buy trend momentum from the weekly level of 1925. And closing above 1931 once again will activate another daily buy trigger. God damn it! We're testing this sell one weekly level, 1925. It looks like it's activated a short trigger from the weekly level of 1925. I'm looking to capture this correction here and a reversion back up into the average mean here. I think we're getting into an oversold condition here, but it's a little bit testing here with the market coming down into these levels. We got a sell-off going on in here, activating the weekly. So if you took this trade earlier here, again, we recommended to use a stop according to your profile, or pretty much any of the three stops that we suggested here. But we seem to be pretty much liquidating into this area now that is activating a weekly short trigger, and the lower target for the weekly average is 1893. So this level here is a very, very, I would say, important level to see if it holds. But otherwise, we're going to be testing that 1893 level, it seems. We've had a number of issues this morning with the platform. I apologize, the market, and it's a challenging day today. So I think it's wise to be a little patient here and see what the market is doing, because this correction, I want to emphasize to all of my traders in the trading room here in Discord, that you want to look to use this correction to add to your position, particularly when you get the signals activated. So manage it accordingly and look to add to the long position on this correction. Look to maybe cover some of the short trades that you have on. If you hedged and we get a reversion from here, that probably would be the confirmation that you should cover any short hedges, any short positions. It closed about 1931 would be that confirmation coming in. We want to take a look at the market possibly completing this correction here. Upon a close about 1931. So I'm watching carefully some of the derivatives. We're getting a little bit of a sell-off across the board. But again, I'm looking for this as a buying opportunity. So I'm waiting patiently. $19.15 and a half. 19.15 and a half traded here. So we got a little bit of a sell-off here. It seems that has realized after it met the target this morning of 1962. I guess some panic selling came in, and that's good because the market was really full of speculation up here, and this is what cleans the market out of any weak trading here. And we probably are getting a lot of longs nervous up here, and so this is a good liquidation of these weak longs that we have, and the price should be coming into stronger hands here, and that's what we are looking to identify as the market trades down here. I don't think that we have completed the target on the upside, the second target on the upside of the monthly level, which is in that pretty close to 1998 level. 1912 was the breakout point just before this rally up to 1962. So we seem to be testing that breakout level of 1912. Market is oversold for the day, below 1931. Activated a short trigger on the weekly from 1925. Fast market conditions. It really, this market, it really doesn't give you much of a chance sometimes to do or to follow through, because the volatility is so great. So by the time you went to the order, the move is already done. So you want to be careful in terms of trading in the futures. And what I'm doing here is basically I'm building a position in derivatives. I'm building a position on very specific instruments that are double X velocity ETFs. And I'm looking to add to the long side of the market. So this correction is welcome for me. We got some buying coming in here. The market is oversold. Even when you take a look at the Bollinger Bands, we're at the bottom end of the Bollinger Band. So this is the area where it identifies the potential level of support that may be coming into the market. Once again, I'm looking for this correction as an opportunity to add to my long-term holdings here. If you are hedged and if you have a profit, if you are protecting your position, that basically this could be an interesting level that you want to take a look and lock in some of those short profits there. This line that we see here on the chart is a major trend line, a Fibonacci trend line support in combination with the codes that we use. One thing I want to say to you is that, even though this is an incredible program here, there is no system that is 100% guaranteed. So you want to be very cautious and prudent in your risk and money management in order to preserve your capital, basically. So regardless of the signal here, you want to use, prudent risk management. And that depends upon your profile. That depends upon, your personal choices that you make. So just be aware that pretty much nothing is guaranteed. So you want to monitor and manage that intelligently. Particularly in the market, particularly in the silver market, the volatility is so great that you can lose a lot of money really quickly. And so managing the risk in the futures contract is a very, very specific criteria and personality. And you want to take that into consideration when you're trading in the futures contracts. Besides the fact that the volatility of these markets here have broken benchmarks pretty much in comparison to the old volatility that we've been used to. Trading one or two contracts in the past, I think we're looking at the volatility currently giving us a 10 to, maybe 10 to 1 differential. Today has not been a good trading day. The market is not responding in the way that basically the signals are being negated is what's happening here from that 1942 level, 1931 level. And we've entered into this short trigger from the weekly. So we have an oversold condition into a weekly short trigger. The close of this bar here is going to tell us pretty much the type of support that we have on this Fibonacci trendline support. So you can see here on the bigger picture, the market came down into this level of support that represents the uptrend line that we established here from the low of 1767. And, this has been a challenge, so to speak, that you can see the market reverted in one day from that 1962. So we're looking at, a $50 trading range, which is what I'm confirming to you, that the volatility of these markets are increasing tremendously. So you want to adjust that volatility according to your profile. Look for reversions from here, support from here, but I think we're coming down into a good, strong level of support. So look for reversions from here to unfold and look to cover any profitable short hedges or short trades that you have. Thank you, my friends, once again for the time and the privilege to share this information with you. And I'll look forward to see you again next time. Take care. I'll see you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Folks, John Najarian here with Steve Collegian, co-founder of Ticker Talker.